Hey everybody, Brian Shannon here from Alphatrends.net. Today's Saturday. It's the 28th of December 2013. The year is almost wrapped up, as we know, and we had a great week for equities. The S&P 500 gained 3.2%, Russell 2000 4.5%. Just some real big numbers here for the final full week of the year. I guess it wasn't a full week, but final week of the year. We've got a day and a half of trading next week, and then it'll be a wrap with 25+% gains. Not including dividends for the broader market. So let's take a look at the action here. We can see the S&P 500 is continuing to travel out to all-time highs here, and great year again for equities so far. Just because we're up to a lot doesn't mean we're going to head lower. I see a lot of people get anxious and antsy when the market gets extended like this and hasn't had a pullback, and rightfully so, but you don't want to be a short seller. You want to be looking to lock in your profits with stops on your long positions, which have worked well for you. So this week we had a breakout to the all-time highs here, and now looking at a 10-minute time frame, I'm not sure why those lines are there, but we'll get rid of them. We can see now that we have the rising 5-day moving average that we're still above, so we're innocent till proven guilty while we're above a rising 5-day moving average. Nothing has changed here for this market. Near term, we do have a little bit of support from Friday that really 183.65 will be an important near-term level. But I think the bigger level to stay focused on is if we do get pullbacks here this week down towards the rising 5-day moving average. The NASDAQ was down 22 cents on Friday, but had a great week. And we got beyond a lot of these levels here that we had been watching. First, a couple weeks ago, we broke that downtrend line with the Fed, and then we came up. We did find support above that 85.50, and 86.50 was broken. We'll now want to see 86.50 hold as support, rather, if we get a pullback down to that level. But more importantly, in the intermediate term, let's stay focused on about $87 a share and that rising 5-day moving average, which should be able to provide support for the market on pullbacks. The Russell 2000 also up at all-time highs here. So the bears have just had a very difficult year. There's been a lot of so-called bad news, but the market has just continued to shrug that off and continue to move higher, which is why we always say only price pays. You can look at it and say, hey, it's up too much or whatever you want, but the fact is the long side is what's been working beyond short-term trades. Of course, you can make money on the pullbacks in a primary uptrend, but the sum of the rallies is going to be greater than the sum of the declines. That's why we get higher highs and higher lows, and until we see that pattern interrupted, the market does still remain innocent till proven guilty. I've been a broken record about that pretty much all year. We get cautious as the market breaks below that 5-day moving average, but with the primary trend still higher, the buyers are still clearly in control, and they've come back time and time again. So in the Russell 2000, I think at about 114.5 is our near-term level we'll want to see hold. If we see that break, then it's likely we'll see a little bit further pullback, but I don't think it would be anything to be concerned about. Definitely not looking for the end of this bull market just because we change the calendar, of course. The semiconductors held that 4160 level this week that we wanted to see hold, and that was important. Looking at the 30-minute time frame, you can see we are still holding above that rising 5-day moving average in these previous highs. So 4160 to 42 is really an important band of support for the semiconductors. You can see we're up at multiple year highs, so it's still very bullish overall. Financials overall very bullish as well. That weekly time frame, you can see we're at levels not seen since 2008 rather. And here on the daily time frame, we had a strong breakout this week. So we'll want to see support hold at about 2160, and we're innocent till proven guilty in all of these markets. If you're trying to sell short, you've basically gotten what you deserve for fighting the trend. I would say that if we're in a downtrend and you're trying to buy as well, it's not that I have anything against being bearish, but you have to be bearish when the market tells you to be bearish, not when you think the market's up too much or overvalued or whatever the reason that you feel is. You want to be bearish things like gold. Gold is in a downtrend. The people who keep buying into gold for whatever reasons, are still getting what they deserve, which is losses. Because if they don't scare you out in this downtrend, they will generally wear you out. Now we're getting very close to that two-thirds retracement of the 2008 lows to the highs in 2011, and it's possible we find some support in there. But I certainly wouldn't be looking to be buying this. It's still in a downtrend. It's guilty till proven innocent, and there's no reason to purchase. By the way, I'm going to put together a report for subscribers to Alphatrends on the January effect. I'm also going to have that available to people who aren't subscribers as just purchase the report and updates. So I'll have more details coming on that. If you just subscribe on YouTube to my videos, make sure you go to alphatrends.net and get signed up for that email. That's how you get the weekly videos sent to you. Let's take a look at the bonds, because the bonds continue to be in a primary downtrend. We've been talking about this guilty till proven innocent and this head and shoulders pattern, which measures down towards about 95. So it still seems as though we're heading lower, down towards about 95 or so in the bonds. That means yields should continue higher, that the market is raising rates. Well, the Fed may not be, the market is, and the market is what sets the rates for, obviously, for mortgages, and that's in personal financing. If the TLT, which is the 20-year average bond yield, gets back above and holds above 102.5, then this might be a little bit of a shakeout. But again, we're guilty till proven innocent here, and there's just no point in making a purchase of these bonds while they're declining. Shares of Apple, we saw they had big news for China on Tuesday, and then we had on Monday we gapped up, and now we're seeing it pull back. It's down to the rising 5-day moving average. The 4-day volume weighted average price, however, since that gap up is at about 565 or so, 565 and a half. So while the stock may bounce from this 5-day moving average, we're going to need to see it have a little bit more time consolidating, I believe, before this primary uptrend can resume. But the path of least resistance is still clearly higher for shares of Apple. And if we kind of look at Apple the way we looked at gold, gold or Apple took some time in here, and you had plenty of time to buy it over here once the buyers took control. So in gold, don't be in a hurry to buy it. We're going to have time to buy gold if it does in fact enter a new uptrend. Let's take a look at a couple other names here. These were some stocks that we really did well with at Alphatrends this week. Shares of LNG, as the trend became aligned right here, we made a purchase, and LNG went from 41.5 up to over 45. I'm sure you had a lot of good winners as well. We got involved in this BALT, maybe a little late at 580, but that's been a nice trade. Shares of BITA we got involved in on Thursday as it broke this 29.45 level, and that was a real nice mover. Shares of Microsoft, of all stocks, were involved in this one on the long side as the trends became back aligned here on this 30-minute time frame, and the daily time frame is up. And obviously you look at the longer term charts, we could be on to a bigger move in Microsoft, so still something that investors might want to take a look at. Again, we're involved in here just as it got back above about 36.90, I believe. Shares of Bed Bath & Beyond, we got that one as it started just prior to the breakout right over in here, and it continues to look strong, and that's in an all-time high zone as well. And then on Friday we spoke about Candy in the chat room, KNDI. So still, focus on managing risk in the individual names. That's what your plan for 2014 should be. Don't listen to all these predictions. They really rarely help people make money. The point is you have to be good day in and day out, and risk management is always job number one. What we focus on Alphatrends day in and day out is finding low risk, high probability trades regardless of whether it's 2010, 11, 12, 13, or 14. I hope 2013 has been a great year for you, and 2014 will be as well. If you're interested in a disciplined approach to the market, consider taking a free trial to alphatrends.net. And I hope everyone had a great Christmas, and you have a awesome new year as well. Thanks.